No, I guess to some degree it was a tale of two markets, right? Obviously, we had that huge crash right at the beginning. Then a reversal that at one point saw NASDAQ and S&P peak into the positive column. We finished a little bit lower. Nevertheless, there was some buying out there. And, you know, I don't think it was all retail buying. I would think it was some smart buying. So the bottom line is, whether you're a bull or a bear, the markets come down really hard. At some point, stocks, at least individual stocks or sectors, have to be a buy. Back with me, I've got the panel. We're going to discuss this right now. Steve Moore, Jim Awad, and Shah Gilani. Shah, I'll start with you. You know, you've been spot on. You've been hot with respect to the downside. But you're also an investor. You understand, listen, buy low, sell high. Are we getting to a point where you would start to look at something? And if so, are there any areas that you like?
We are getting to a point where I think I would look at things from a speculative perspective, a short-term trading style basis. Liz and I were just talking in the green room about oil stocks. This is probably a good time to throw a little cash into some of the oil stocks. If oil pops, I'm not saying it's going to, but I'm saying if I'm going to put some money down on the table now, it would probably be in oil stocks with their big dividends. Some of them are definitely going to be subject to being reduced.
Sure.
But if oil rises, we get some spike in oil, something happens, then oil stocks are going to be a great place to jump into right now.
Yeah, some of these smaller names have already reduced it, but to your point, I mean, Chevron is a name I love right now.
Yes.
No matter what, you know, I know it's down about 11 to 15% for the year, but 5–8% dividend yield right now. I don't see how you can go wrong with that over the next year.
The big cap oil companies are going to be the place to be because they're less speculative in terms of their ability to withstand this oil drop. And I think they will come back a lot sooner than any of the small energy producers and explorers,
right,
who are going to suffer from the high yield debt issues.
Right. What's up, Jim?
Well, so you're starting to get some more attractive valuations for the first time in a long time. Some of the big financial institutions, let's agree that they're utilities now, but they're selling below book and at reasonable valuations. Some really classy companies in there.
I guess when the buzz going into that first rate hike is you got to be in the financials. They always do well, and they've been an unmitigated disaster. Goldman, I guess, had a so-so number today, you know, but the fact of the matter is, maybe it's to what Steve Moore was talking about, part the new regulations that's hamstrung them to a certain degree. But
these are really valuable franchises in the long term. They move capital around the economy, and if you buy them into the weakness I expect over the next couple of months, and also some of the dividend stocks that you're talking about. I mean, the auto companies are selling at a 5% dividend. Some of the most hated companies, the dividends are starting to get attractive, but just don't expect to make money this year.
Steve Moore, any areas that look attractive?
Well, I like this idea about oil. I don't know if it's quite right the time to buy oil, but, I met with some of the CEOs of some of the major oil companies, and one of the things that's going on in this market is there's an old saying, necessity is the mother of invention. They got a little, fat and happy when oil prices were at $100 a barrel.
Right.
But these prices, I mean, the cost of drilling is going down very dramatically. I mean, the technological improvement is really breathtaking. Charles, you know about this.
Oh, sure.
And they can't make money at $26, $27 a barrel, but they can now make money at 40. And so if we do see a rise, and I do think eventually we're going to see a return to normalcy, maybe $40 a barrel oil, I think they can make money at that. And the only other thing I would add to this is we're not talking enough about the beneficiaries of low energy costs, and I would say that's manufacturers in the transportation industry. That reduces their costs
to your
dramatically.
point, we saw the Dow Transpose turn higher today. Of course, they led the market lower. Maybe they'll lead us higher. Today, for my traders, we did Spirit Airlines, and Netflix blew them away last night. It was down. That's still a stock. If you have the stomach for volatility, I think you could trade too. Talking about short-term trades.